A listed company on the New Zealand Stock Exchange, the Warehouse Group is one of the largest retailing groups operating in New Zealand, as started in 1984 by Sir Stephen Tindall. They are a retail group consisting of 6 core retail brands with 260 plus retail stores, online stores, and distribution centres throughout New Zealand. Under New Zealand legislation, specifically the Companies Act 1993, the financial statements of any large company or public entity that is a listed company such as the Warehouse Group must have their financial statements externally audited as part of legal obligation, as to maintain independence and professional opinion. However, this law does not state internal audits are required as part of this act, but in their financial reports, the Warehouse Group declares they continue to internally audit their financial statements with the role made clear as to assess the design and operating effectiveness and controls governing key operations processes and business risks, to provide the board with an assessment independent of management as to the adequacy of the company's internal operating and financial controls, business processes, systems, and practices, and finally, to assist the board in meeting its corporate governance and regulatory responsibilities. This will also provide confidence in their key investors by ensuring the processes and financial statements are upheld in an efficient manner. The Warehouse Group can provide reasonable assurance to their key stakeholders that their business practice is efficient and thriving. Inherent risk is described as the possibility of material misstatement could occur in an assertion either in a group or individually on the assumption there are no related controls in place. Therefore, economic climate is an inherent risk for the Warehouse Group, more specifically the recent COVID-19 worldwide pandemic, as it exists independently of the audit of the financial statements but has large effect on those statements. As discussed in 2 news articles by stuff.co.nz, the Warehouse Group, more specifically the Warehouse, has stated dramatic downturns in the business as a result of the ongoing pandemic, which has resulted in over 1,000 job losses. However, they have posted an increase in preliminary profits after the wage subsidy as well. This suggests that while they suffer from changing customer patterns, the global situation has caused disruption in their business, stating that they would have had a loss of $4.3 million before the subsidy. Another major inherent risk the Warehouse Group faces, while not explicitly discussed, is the threat of external theft. As with any retailer, shoplifting is a common occurrence and is relatively hard to meet with countermeasures other than security in place. In terms of auditing, this poses a risk to the preliminary inventory count, as large quantities taken without record could lead to material misstatement or overstatement of valuation of the inventory account. Finally, as a retailer that sells goods with warranties, there exists another inherent risk of financial misstatement, as these accounts are entirely dependent on accounting estimate and prediction. When offered a warranty, the account recorded for this allowance will solely be made up by management based off historical data from previous years. However, it does not involve internal controls to monitor this, therefore is inherent. For example, for the Warehouse Group, the warranty account made up approximately $5 million of the provisions account on the latest financial reports. This figure is uncertain, therefore could lead to material financial misstatement. Control risk, however, is described as the possibility material misstatement could occur in an assertion either in a group or individually, and that it could not be prevented, detected, or corrected based on the internal controls in place. The group does not specifically describe any internal controls in place. However, they have outlined mitigations to specific risks they face as a business, which have been a guide to internal controls I have assessed. A control risk for the Warehouse Group, primarily their major subsidiary, the Warehouse, from close observation, is an outdated computer system, namely for their stock and cash register systems. With these older systems in place, there's more room for error or fraud, where the less secure nature and the staff's knowledge of the system make it easier and could potentially lead to misuse in terms of over or understatement of sales for personal gain, and inaccuracy of the inventory system in place as a precaution against theft. On assumption of observation, an internal control the Warehouse Group has in place is the segregation of duties and authority required to approve certain transactions, such as large amount refunds or changes of price. This is in place to prevent the occurrence of fraud or create misstatement in the records of sales. However, the control environment in this case is quite weak, as staff often bypass these protocols by providing necessary information to go ahead, e.g. the username and password, without a physical presence to continue with the transaction. This offsets the internal control in place and makes the business susceptible to fraudulent transactions and subsequently either over or understatement of sales. The final control risk, on assumption from observation, is the delegation of cash handling duties. At any one time, no one person should be walking with a till of cash towards the day end. However, due to efficiency, this process is often overlooked, creating susceptibility to fraud and understatement of cash transactions compared to the record. The audit risk model is a tool used to evaluate the overall audit risk an entity is at, depending on the nature and level of risk at the inherent control and detection risk. By assessing the Warehouse Group, particularly during recent times of the pandemic, I've concluded that the inherent risk is high for a retailer and their accounts are susceptible to misstatement. As with inherent risk, the internal controls, while in place, need improvement for effectiveness as there is large room for error and avoidance by staff, creating an overall high level for the control risk of the Warehouse Group. However, in the audit process, these failures in business operation are easily detectable and corrected when shown to the operating entity. Therefore, the detection risk remains low despite high risk in the other parts of the model. With all factors considered, I have determined that the overall audit risk for the warehouse group is at medium level. While there are possibilities for misstatement at the inherent and control level where it is high, the detection process in auditing and the associated detection risk allow the overall risk to decrease, as this process provides a platform and assurance to the business of the accuracy of their records, resulting in an overall risk state at medium.